James Wise with Holton Wise. I am super excited about this video. Today we're going to go over two things. First, we're going to go over an awesome investment property in Euclid, Ohio. As many of you know, Euclid is the area that Holton Wise is targeting above all other areas because we are so excited about Amazon coming to the city. There's going to be thousands of jobs added to the area, which we believe Euclid is the best bet in the Cleveland area right now. We see more jobs, which is going to equal higher rental prices, higher demand. Euclid is where we want to be. Second, I'm going to break down an investment property for you. I'm going to completely analyze it. I'm going to show you how the pros look at everything. We have our income, but that is not the end of the story. There's so many expenses, whether they're fixed or variable, changing at all times that come in with owning a rental property. Today, I'm going to go ahead and go through exactly how you break down the numbers on these properties. And on top of that, I'm going to show you the best way to finance a purchase exactly like this. Let's dive in. First, let's start with the actual investment. This property is a fully occupied duplex located in Euclid, 927 East 216th Street. This thing is 2 beds, 1 bath in each unit. It's been recently renovated, it's in good condition, and the rents are already pretty high on the top of the market spectrum right now. When Amazon comes into town, I think there's going to be opportunity to increase those rents, but right now, it's not like you're coming into a distressed asset. You're already getting huge rents. One unit is renting for $794 a month. The other unit is renting for $700. So we have a total rental income of $1,494 a month. And the purchase price is only $99,900. Let's go over a little bit of the details on the property. It was built in 1964. There's 2 furnaces, so the owner, as the investor, all you have to pay for is the water and the sewer. The tenants are going to pay for their own gas, their own electric. That's pretty standard here with most of these duplexes. Both your furnaces are only 10 years old. Your water tanks, one was installed 6 years ago, the other 10 years ago. You don't have any electrical issues to worry about. Both panels are completely updated, so no issues there. The major mechanical systems of this property are good to go. In a city with such a huge upside like Euclid, it's pretty obvious that this is an awesome investment. But that's not where it ends. Let's talk about this. $14.94 a month in rent. That equates to $17,928 a year in rental income. But you're not going to see $17,928 a year in rental income. There is going to be costs associated with owning a rental property. Some are fixed, some are variable. Now, what exactly do I mean when I say fixed costs versus variable costs? Fixed costs are costs that you're going to incur every single month as a property owner. Now, when I say fixed, I'm not going to guarantee you in stone that they're never going to change. They could change slightly, but generally speaking, they're going to remain relatively consistent. Example would be your property taxes. That's a fixed expense. Could property taxes go up or down? Well, they could probably go up with a levy, something like that. I guess theoretically they could go down, but I own a lot of rental properties. I've been in this business a long time. It's not often that they do go down, so you're just going to bank on it. Could eventually go up, but for the most part, they stay pretty consistent. Another thing would be property insurance. By the way, if you need property insurance, do not forget about the Hogue Insurance Agency. They have the skills and knowledge to handle investment properties. They will be able to take care of you and insure properties just like this. It does not matter what state you're watching this from. The Hogue Insurance Agency works with investors from all around the country to insure many rental properties that Holton Wise sells. They know the policies that you need. They know the bottom line is the #1 priority, so they will not try to upsell you on anything. So taxes, insurance, lawn care, property management fees. You could pretty much consistently guesstimate what these numbers are going to turn out every single month. Then you have variable expenses. Now, it's very important that you know as a rental property investor that at all times there is an unlimited amount of variables at play. What do I mean? Your tenant could move in and lose his job the very next day. Your tenant could get into a fight with his girlfriend, punch a hole in your door. Your tenants could burn your house down. There's just so many things that could happen. Okay, we cannot predict all of them. Now, if you buy in a nicer asset class, which is why Euclid is so nice, it's a B quality neighborhood. If you want to know what I mean when I say B quality neighborhood, go ahead and Google The Ultimate Guide to Grading Cleveland Neighborhoods. That's an article that I wrote. that explains the different types of asset classes we have in the Cleveland market. It's very important that you read that. We'll put a link to it on the screen. So, assuming you've read the Ultimate Guide and we're on the same page, we know that B-class assets, the tenants don't do too many insane things, but there's still going to be variable things you need to worry about. These things are going to be drastically different month in, month out. Okay? Our fixed expenses, while we don't know exactly that they'll stay exactly the same every single month from here to the end of time, we do know that they're going to be very consistent. These are costs we're going to have every single month. The grass will grow every month. You will pay Uncle Sam every single year. Our variable expenses are different. Things like capital expenditures. Now, what is a capital expenditure? That is things like your roof, your hot water tanks, your electrical system, your plumbing systems. A roof is going to last roughly 30 years. Right now, a roof on a house like this is going to be around $6,000. Okay, so we take that into account when we develop capital expenditures. So we know that every 30 years you're going to have to spend roughly $6,000 on a roof. So we break that down in a monthly increment. Will you pay for part of your roof every month? Absolutely not, but that is something we need to account for. And it's going to happen 1 month during that 30-year period. Make sense? It's not like you can say every single month you're going to pay $0 for a roof, because you know you're going to eventually pay $6,000. So we break that down. That's a variable expense. Another variable expense, repairs. Sometimes things break. We can't predict exactly when they'll break, but they will break, so we need to account for those. Another thing, vacancy, non-pay. Sometimes tenants don't pay. That's a factor in the business. So remember, our gross rents for this property, $17,928. But if a tenant is not renting our property 1 month, that number is going to go down. So these are our variable expenses. Now, what I'm going to do is I'm actually going to break down this exact property. I'm going to be using real numbers to give you exactly the return you should expect. It's very important to note, though, that, like I said, there is an unlimited amount of variables at play at all times. So will you make exactly what I'm going to tell you you're going to make every single month or year? No, you will not. You must know that. I want to repeat. You will not make exactly what I'm going to tell you today every single month, every year. Sometimes you'll make more, sometimes you'll make less. There is an unlimited amount of variables at play at all times when you're in the rental business. I cannot stress that enough to you. These are real numbers. These are numbers that we use at Holton Wise when we are analyzing investment property. The rent, $14.94 a month, which is going to be $17,928 a year. Now, we have fixed expenses and variable expenses, so let's get into our fixed expenses. Our taxes are going to be $2,719 a year, which breaks down to $226.58 a month. Our insurance with the Hogue Insurance Agency is going to be roughly $1,200 a year, or broken down by the month, $100. Holton Wise can manage this asset for you. We are a full-service property management company, so it does not matter if you're here in Cleveland or if you're in California, Texas, New York, Singapore, the UK. Wherever you are, we can handle this asset for you. So we do charge for that fee, of course, 10%. So seeing as we're getting $14.94 a month in rent, we charge $149.40 a month in our property management fee, which breaks out to $1,792.80 a year. Lawn care, a yard this size, we charge $33 to cut the grass. We cut the grass between 16 and 18 times a year at $33 a cut. So generally you could expect to spend $504 a year on your lawn care, or that equates to a $42 a month charge. Just using our fixed expenses, every month we're going to bring in $1,494 a month, and we're going to spend on fixed expenses $517.98. That equates to $17,928 a year in income and $6,215.76 a year in expenses, fixed expenses. Now let's get into those variable expenses. Repairs and maintenance. Again, you cannot predict exactly when a repair is going to happen. Maybe your toilet breaks in June. Maybe it breaks in July 3 years later. We can't exactly tell you when that will happen down to the month. That would be impossible. However, As a company with thousands upon thousands of rental properties, tenants, we've dealt with it all, we've seen it all. We average out these types of occurrences throughout our entire portfolio over the long haul and give you a reasonable expectation of what you can expect. Will every single year be the same? No, it will be different. But what we have figured out for a property that's multifamily, that's 2 units, see, your single-family tenants and your multifamily tenants are going to be slightly different. Your multifamily tenants tend to move out more often than your single-family tenants. So, you're going to have higher vacancies. And because of higher vacancies, you have more turnover, which is more costs. So we use a little bit higher numbers. So what we like to calculate is you can reasonably expect, on average, over your portfolio of B-class multifamily assets, to spend roughly 3.5% of your gross rent on repairs and maintenance. In this case, that would equate to $627.48 a year, or averaged out $52.29 a month. Again, you're not going to get a monthly statement from Holton Wise with a $52.29 repair every single month. It's not going to happen like that. It's going to be $300 service call. That's how that's going to break down. Your vacancy and your non-pay, factoring in the fact that, hey, this is a multifamily asset, these tenants aren't going to stay there forever. People are going to move out, new people are going to move in. So we have to factor that in. With a multifamily investment in a B-class area, we factor in 5% of the rental income is going to go towards you paying for vacancy or people staying and not paying. Now, if you had a B-class single-family asset, we would factor a little bit less. If you had a multifamily investment in a C or a D or an F-class neighborhood, we'd have to factor in more because the tenant class is lower and they do things like not pay more often. That's where the ultimate guide to grading Cleveland neighborhoods really comes into play. Because sometimes you'll see, the other day I sent out a video where I was selling a duplex with similar rents, but it was only $35,000. Why is it only $35,000? Because the rents, they're not going to be as easily collectible as these types of rents. And then when those types of tenants move out, they do a heck of a lot more damage than these types of tenants. So that's where all that stuff comes into play. Using that 5% as our estimate here, that's going to factor into $896.40 a year, or averaged out $74.70 a month. The last variable expense that we need to factor in, and this is a fun one, the water and the sewer. You want to talk about not being able to estimate this to the exact dollar. This is the number one that is like literally the hardest thing for anybody to estimate. Okay? It's water and sewer. Every single tenant is going to be different. And we cannot tell you, I know a lot of you are expecting everything out of your property manager, but when we are having our leasing staff show these properties to tenants, I can't have my leasing staff out there, hey, excuse me, Mr. and Mrs. Smith, you're going to rent my property. How long do you take showers for? Do you take 10-minute showers, 15-minute showers, 20-minute showers? Do you take 1 shower a day? Do you take 2 showers a day? We can't ask those kind of questions, okay? That's just ridiculous. But what you need to know is over the course of us running all these properties, you can reasonably expect in a multifamily asset in this neighborhood class to spend $150 a month or $1,800 a year on water and sewer. Could it go higher? Yes. Could it go lower? Yes. Maybe one month, it's summer and the kids are playing baseball and they're getting dirty. Okay, you might see your spikes. When we see dramatic spikes, we know there could be an issue. Like that is, the water bills are how we've caught a lot of tenants who've actually put pools in their backyard without being allowed to. That's a good way to catch those types of things. But outside of huge spikes like that, it's going to go up, it's going to go down, and every tenant's going to be different. That's all of our variable expenses. Total variable expenses we can reasonably expect, $3,323.88 a year, breaks down to $276.99 a month. Now, let's get rid of all this and we'll go over the summary. Income, $1,494 a month, $17,928 a year. Our fixed expenses are going to average out $517.98 a month, $6,215.76 a year. Our variable expenses are going to average out to $276.99 a month, and then that's $3,323.88 a year. So total expenses that we can expect, $9,500 $39.64 a year, averages out to $794.97 a month. Now this next number is what you actually make. This is the amount of money you put in your pocket. This is your return. It's called your net operating income. Okay? Your rents, that's your gross income. Your net operating income is the money you could expect to put in the bank. $8,388.36 a year, or $699.03 a month. So if you spend $100,000 or $99,900 to purchase this property, you can reasonably expect to make $8,388.36 per year. That is an 8.4% return on your money. That is a pretty solid investment. However, I want to challenge you to really think outside of the box here. I produced another video called My Top 5 Reasons Why You Should Buy a Rental Property. If you have not already done so, watch that. In that video, I'll put a link to it on the screen or in the description. That is a good video. You want to see that. One of the major reasons you want to buy real estate, everyone thinks it's this cash flow. And cash flow is important. Making $8,388.36 per year without actually doing anything, because it's a 100% passive investment. HoltonWise is taking care of all the day-to-day operations for you. That's an 8.4% return on your money. That's good. People focus on that. But I don't want you to focus too much on that. I want you to focus on what I think the most important reason to buy rental property is. I go over those in the video, but I'm going to give you the most important one today. And that is the ability to use other people's money. You can buy these properties with someone else's money. Can you do it no money down? No. You have to use a little bit of your own money. A non-owner occupied investment property like this is going to require a 25% down payment. So think of your investment as a pie. You're going to pay for 1/4 of that. But then there's 3/4 of that pie. Where are you going to get that money? You're going to get that money from the bank. You're going to purchase a property, and 3/4 of that property are going to get paid for by someone else, the bank. And who's going to pay the bank off? That's your tenants. So you're literally quadrupling your money. And that money is not hard to get. As a matter of fact, this video is actually brought to you by Justin Hazen from Cross Country Mortgage. He is a loan officer who deals with these types of properties all the time. He can loan to buyers in all 50 states. It does not matter where you live. So you could be watching this video in California, you could be watching it in Texas, you could be watching it in New York. I want you to reach out to Justin to get pre-approved. He has worked with several HoltonWise clients in the past on deals just like this. He understands the investor mindset. He comprehends that this is a non-owner occupied purchase, and he understands that you're not going to be local to him, so he's able to quickly get you documents that you could digitally sign. Look, here's the deal. I love all you guys. I love doing these videos. I am the #1 seller of investment properties in the Cleveland area. If I could, I would talk to every one of you individually. But logistically, I can't do that. You know, these videos, if you look, they get thousands of views. They make money. These investments, we've already established we're going to make at least $8,388 every single year. Everybody likes money, so a lot of people want to offer on these properties. I do not have time to talk to every single investor individually about things like how to get their financing in order. So I like for all my buyers to be pre-approved before they come to me. So the first step in this buying process would be to reach out to Justin. From there, we can move forward. You know, there's intense competition. I expect multiple offers on many of these properties, especially this one, given the rental income, the price point, and the fact that we're in Euclid, the hottest area in the Cleveland market right now. You're ready to buy this property with financing. And this is going to be key. You are going to explode your business by buying this property with financing as opposed to cash. If you bought it with cash, remember, you're spending about $100,000 and you're making $8,388.36 every year. But I want you to buy it with financing. Why? Because instead of buying one property, you're going to buy 4 properties and you're going to double your money. Let's break down how the numbers are exactly going to work. Currently, lenders like Justin with Cross Country Mortgage, they're doing 30-year terms with 25% down for non-owner occupied investment properties. So your down payment is going to be roughly $25,000. It's going to be $24,975. It's going to leave you with a mortgage of $74,925. For this next step, you want to go ahead and Google mortgage calculator. When you Google a mortgage calculator, you're going to be able to put your mortgage amount in there. So in this case, $74,925. And typically these websites, they're going to give you the average percentage that you could expect to pay. So I did it before we made this video. Right now, they're quoting out an APR of 3.71%. So that means if you use $24,975 as your down payment, and you get a mortgage from Justin and Cross Country Mortgage of $74,925, your monthly payment, that's principal and interest only. Now, a lot of you like to put your insurance and your taxes in your mortgage. That's fine, but remember, we already accounted for those when we did our fixed and variable expenses. So that's already factored in. So just the principal and interest is going to be $4,428 a year, which breaks down to $369 a month. We have a net operating income of $8,388.36 a year. If we take all 12 of our mortgage payments, that's going to be a total mortgage payoff that year of $4,428, which leaves us with $3,960.36 per year, averages out to $330.03 a month. So, could you buy this property with cash? Yes. And you'll make $8,388.36 per year. You could also buy it with a mortgage and only spend 1/4 of the money. Let Justin Hazen and Cross Country Mortgage pay for the other 3/4 of your property. You'll still make $3,960.36. That's what you're putting in your pocket. After we factor in fixed expenses, variable expenses, and mortgage payoff, you're going to put $3,090.36 in your pocket. If you break that down, instead of an 8.4% return, you're now getting a 15.86% return. You've essentially doubled the return on your investment. But it gets even better. You only spent 1/4 of the money. Justin gave you the other 3/4. So why don't you still spend that $100,000? So instead of one property making you $8,388.36, why don't you buy 4 properties with the same amount of money, bringing in $3,960.36 a month? So those 4 properties are going to bring in a total of $15,841.44. That's the power of leverage. That's the power of using other people's money. That's why I chose real estate as my primary investment vehicle. You cannot use other people's money in the stock market or to buy Bitcoin or whatever else they're pitching you these days. You can do that with real estate. There are guys out there like Justin Hazen and Cross Country Mortgage who will give you the majority of the money. Utilize them. Leverage them. Why make $8,000 when you can make almost $16,000? And then 30 years from now, when those mortgages are paid off, if you bought one property, it was worth $100,000 30 years ago. Let's say there was no appreciation and it's now worth $100,000. You still got $100,000 and you made $8,000 a year. But if you bought 4 properties with the same $100,000, you now have $400,000 worth of property. So you've already quadrupled your money, not to mention you doubled your cash flow, you doubled the amount of money you put in your pocket every month for 30 years. That's why real estate makes more self-made millionaires than any other industry in the United States of America. If you would like to buy this property, the link to do so is going to be in the description below. Holton Wise is the #1 seller of investment properties in the Cleveland area. So if you want to buy real estate, no matter where you live, whether it's in the U.S. or outside, we can handle it. We can take care of all the property management for you. We can hook you up with someone to give you the money to buy the property. We will put you in touch with qualified lenders like Justin Hazen and Cross Country Mortgage. We will help you insure the property through companies like the Hogue Insurance Agency. We will handle all the property management. This is real estate investing made easy. And if you're a seller who has a property like this and you no longer want to be in this industry, you want to divest, maybe you want to buy a boat. Hey, that's cool. Reach out to Holton Wise. Our buyer base is nationwide. We have the buyers from all over the world, so we are able to sell your properties quicker and with minimal tenant interaction. A lot of people think you have to kick your tenants out when you sell properties. Not when you work with Holton Wise. We can do this without bothering your tenants. We don't have to send people into the properties 5, 6, 7, 8, 9, 10 times. We can deliver you offers without sending buyers in because the majority of our buyer base is not even in the Cleveland market. I'm James Wise with Holton Wise. If you'd like to hear more about my story as a broker, investor, entrepreneur, you could follow me on Instagram at JamesWiseHWPG. I like to really peel back the layers and give you like a behind the scenes of how a real estate investor lives. Like, you know, see this business through my eyes. Do me a favor and pound that like button. A lot of you are watching these videos, so if you found any value in what I've explained to you today, please pound that like button, share it with your friends, tag 3 people who want to invest in real estate or want to sell real estate. Or if you're another business owner in the area and you have some type of product or service that is related to real estate in any way and you would like to sponsor one of these videos, reach out to us. Link to how to contact us in the description below. If you want to see more about real estate, if you want to buy real estate, you want to sell real estate, you want to learn about real estate, if you're a realtor and you need marketing tips, subscribe to the Holton Wise channel. We are pumping out more content than anyone else. As always, I'm James Wise with Holton Wise, real estate investing made easy. James Wise here. I am super you, Tom. I'm like nervous right now because I know how amazing this video is about to be. Have you been on this whole time?
It's been on for about 20 seconds.
Spirit fingers, spirit fingers, spirit fingers. Hug insurance, hug insurance, hug insurance. Cross country, cross country, cross country, buy cross country. Justin Hayes, cross country mortgage. Ooh, that's probably, cut that out. I don't want to see that in the bloopers. How's my pocket square look? Is that a good looking pocket square? Expenses as well. Let's dive in. I'm going to do that again. I didn't like it. There are several. You, Tommy! You! Tommy! I need that paper! Who the hell's better not up my chicken wing order? My beard still look good? My collar good? Help your boy! Hashtag Tommy hair and makeup. Now you. No, you're beautiful!